Wow, solar farms on chain. It's nice to see some optimism back in the space. Next up, we have Funding the Future, Evolving Models for On-Chain Startups with Jonathan King from Coinbase Ventures and Debra Nita of Yap Global.
Hey everyone, GM. How's it going? Third day? You're doing good? Good parties last night? I've heard of some people who went to bed early last night. So I think everyone's had a really big week. Thank you so much for joining us in this conversation. Quick introduction. I'm Debra Nita. I'm an associate director at Yap Global. We help projects gain publicity through media coverage, narrative development, thought leadership, basically getting them in front of journalists and media. And I'm really excited for our conversation today.
Likewise.
Please introduce yourself, John, and tell people what you're all about.
Yeah, hi everyone. So Jonathan King, most of you probably know me as JK, investor at Coinbase Ventures. So Coinbase Ventures is an early stage investor in like all things crypto and Web3. We've been investing since roughly 2018, have just over 500 companies in a portfolio, investing through all market cycles. We're fairly generalists, so have like decent exposure across a wide variety of different primitives ranging from infrastructure to applications to DeFi and across multiple ecosystems. So looking forward to the discussion today about what's changing in the kind of VC and perhaps like, retail fundraising environment.
Exactly. So I think we've experienced a relatively big shakeup in how fundraising has been done in the past 6 months. And you guys are right there in the trenches. So let's dive right into one of the most popular platforms that started making the waves at the beginning of the last quarter, or the end of last year. So let's start with Echo. I think most people have heard of Echo. It's an investment platform that Kobe, a prominent investor, created. And essentially, it opens up seed round investments to a broader audience than the traditional VCs. And so Echo was actually available starting last April, but it really started catching attention with this one particular investment by Mega Labs or Mega ETH. I don't know if you guys remember, but they basically raised $10 million in 3 minutes on this platform. And I'm curious, John, like, what kind of conversations that stir up in your circles among, the other VCs or within Coinbase Ventures? Like, take us behind the scenes. Was it expected? Do you guys have concerns?
So we don't have like concerns. I think what was like surprising to us was looking at the demand from retail to get access to a market which traditionally was private and probably only limited to a select few, which was like kind of institutional investors, right? So seeing like the Mega ETH fundraise, like the $10 million in 3 minutes, what that proved to us was there's immense demand from retail to have skin in the game and want to participate and actively contribute to some of these projects. And so platforms like Echo, what they're doing really well is really democratizing access to some of these private fundraisers. So Echo, as many of you all may know, Echo's built on top of Base. It's fully on chain. You can raise funding for Echo. So as a participant, let's say if you're a retail investor, you actually have to be invited to join one of the groups on Echo. So typically these groups are set up by an investment lead. That investment lead makes deals available to his community members, his or hers community members. And then as retail investors, you're presented with literally the same terms as other VCs that might be presented in the round, right? That comes with some type of lockup period as it relates to the token event. And again, it just gives another avenue for retail to get access to, what traditionally was like you had to be in the know or you had to have those relationships, but it's opening up the aperture for retail investors.
So does that make things a little bit more difficult on your end, just because I guess there's more options available out there in the market?
I don't necessarily think it makes things more difficult. I do think what it does well is it aligns incentives, right? And so typically some of these founders, what they'll do, they may go raise funds from, let's say, a traditional VC because of some of the value adds that they can bring. And then they perhaps will go raise a smaller round or a larger round on Echo, right? Because they want to bring the community along with them. So we actually think it's actually very complementary.
Cool. So I think maybe before we go into like a little bit more detail about the different emerging approaches, I think we need to talk a little bit about the past. So the very popular vehicle for raising funds when this whole industry emerged was the ICO, initial coin offerings. And they were very popular from 2016 to 2018. Blockchain projects essentially issued cryptocurrencies to raise funds for their startup. Now, Ethereum had, of course, had its own ICO, and it raised around 31,000 Bitcoin, which at that time was $18 million worth. And of course, this led to like speculation, scams, and then the regulators got interested. And then everything got kind of shut down. It seemed like this is a re-emergence of ICOs. This is like ICO 2.0, or like, what's your take on that?
Yeah, so my personal take is that I think the ICO term is a bit outdated at this point, right? It's really on-chain capital formation, right? And so as founders, what's happening is that they're having access to multiple different avenues to raise funding for their projects, right? So I'll give you an example. Like the traditional route is going down, to venture capital and raising, let's say, a pre-seed round to build out an MVP, a seed round to now scale that MVP and prove out product market fit, and now like a Series A when you're really starting to kind of like pour a little bit more gasoline on the fire. There's platforms such as Echo, where now you want to go out to, let's say, accredited investors and raise funding from angels, and all of that being transparently available on chain. There are now, let's say, token launch pads, right? And so we're seeing like examples of, if anyone's been following the stuff with Zora, and like creators are creating like their tokens. And so there's multiple different avenues in this environment for, kind of raising capital, right? And it doesn't have to be through the traditional like VC route or angel investment route. I do think we're entering this land of like permissionless token creation, and it's giving multiple avenues for retail along with like traditional VCs and institutions to participate in that economy.
So the question is like, why is this happening, and why is it happening now?
Yeah, that's a really great question. So I think like you have to kind of think back to like his history of, let's start with like history of crypto VC. So 2013 through 2016, I'd say, was like the early emergence of crypto VC, and that was like investments by, let's say, more generalist funds like an A16Z, USV, that invested into Coinbase, they invested into the Circles, the blockchain.coms. It wasn't until like, 2013 where we had like the first crypto native VCs starting to emerge, and, fast forward to 2016 to then 2018, there was investments into kind of like crypto native projects. In that 2018 period, that's when we did have those ICOs. And so I don't know if everyone caught the debate yesterday between Hoseb and then Michael from Legion. They were kind of talking about like crypto VCs versus ICOs. Hoseb brought up a good point yesterday when he was saying like ICOs, the reason it was kind of like the boom and bust cycle, because a lot of these projects, there wasn't a real project, right? There was an offering of a token before there was a white paper, before there was an actual project. And so that was the boom and bust cycle of ICOs. And then you started to see 2018, 2019 forward, you started to see the institutionalization of crypto VC. So Coinbase Ventures was founded in 2018, and our remit was to go seed the ecosystem, right? We believe that Coinbase shouldn't be the only company that should be on a path to going public within the space. So we wanted to seed the ecosystem. Now that the ecosystem has matured, so has our investment strategy. And so we're, very longer term aligned. We're investing into exceptional talent that, supports our mission of growing the on-chain economy. And there's other investors that share that same sentiment. And then now we have the available tools, the networks Echo being built on top of like Base as an L2 and connecting through, smart wallets using USDC. We have the tools to make this investment class more open, more accessible to retail. So it's a natural revolution. And like I said, it all falls within the theme of multiple different avenues to on-chain capital formation.
And I think so. One of the key reasons why this has emerged, is this alignment between the community and the projects themselves. And I think that's a big reason why this whole thing has really, gained a lot of traction between the different versions that exist today of platforms. So between Echo and Legion and BiddlePad, are there any interesting nuances that make them different? And are there any others that are on your radar as well?
Yeah, I think like you captured the primary three that have since emerged. I think again, Echo as a platform on top of Base, what Echo requires accredited investors or qualified investors in order to get access. So you actually have to apply to some of those investment groups and be invited to participate. Legion is taking a different path where Legion employs like this merit-based system. And so what that accounts for, as users like connect their wallet, Legion is applying like, their backend tech is looking at, okay, what is your on-chain like kind of history, right? How have you participated and actively contributed to the ecosystem? Have you written any code in GitHub for this project previously? And so Legion makes, their platform available to retail investors in EU, right? So if you want to follow like the EU regulatory guidelines, you can get access. BuildPad is relatively new. I believe there's just one project that has come through the BuildPad launchpad, and I'm still trying to see how that's going to play out. But like I said, all of them are very similar, where they're just trying to give access to what was traditionally very private, closed off, proprietary in a sense, giving access to curated deal flow, giving retail investors an opportunity to participate.
Great, thank you. So we've talked a little bit about the pull factors, which is why these platforms then have emerged and become popular. But I think there's also the other side of the coin, which is the push factors, which is, okay, so maybe I'll set some context. Like, part of what I do is help projects gain publicity, and some of the things that gain publicity is when they fundraise. So a fundraise story. And recently, what I've been hearing from some of these projects is that they're just doing 100% community back. In fact, they're saying, like, I don't want to be associated with the brand of VC. I don't want to take VC money. And so I think that there's some kind of push factor behind that. So could you maybe respond to like the critique of why these sort of new approaches have emerged, and is it fair?
Yes, so this is a very, very good question. So maybe to just set some context, right, on where that critique originally came from. I would say 2023, 2024, 2022 to 2024, we saw the launch of like several big name infrastructure projects, right? Everything from L2s to new infrastructure primitives. And the thing that you would see on crypto Twitter, which I believe you're referring to, is like this idea of VC-backed projects that are launching with low float, high FDV. Right? And so the low flow concept was essentially very limited circulating supply of tokens. So if most like projects will launch with, let's say, 1 billion token supply, the low flow would say less than 10%, so less than 100 million tokens. So as more tokens were introduced, so let's say unlocks happen, and again, the unlocks meaning that the cap table, the investors, which is typically VCs that would have access, that would introduce sell pressure on that token, right? And so any like little movement, purchase of the token could make the price fluctuate pretty volatile. And so that's where a lot of the negative sentiment started coming towards, well, venture investors, they were able to get into these projects at very low FDVs. Now the project has launched and they're selling on resale, which that's not the case. So that's why you had like these platforms emerge like Echo. So that way other retail participants, again, can actually invest into these rounds alongside the VC and participants, right? They would sign up for similar token lockup periods and investing schedules, et cetera, and they would have more skin in the game. The other thing that I would say is, and again, this was emphasized yesterday, why would some projects, come to VCs versus perhaps doing like a community launch or fair token launch? And the thing I always encourage founders is to really think about the value adds, right? So when you're thinking about, let's say, the investment team that you want to surround yourself with, typically venture investors have access to a broad network of SMEs. A lot of times for Coinbase Ventures companies, our portfolio companies come to us and they want to speak to our policy team at Coinbase, right? We will get questions on, hey, what does the regulatory environment look like in this emerging part of the world? And so we have the staff available to make that expertise available to them as like a service, as a value add. Again, that connectivity is something that a more institutional, traditional venture fund can provide compared to just a retail investor, right? So that's why I think you're having like this blended hybrid model where some founders will still go down the path of, inviting VCs to participate because of the value adds that they can bring. Otherwise, yes, some of are absolutely happy to, kind of just do a fair launch, and we think that's fine as well.
And so have you guys, talked to projects that you're interested in and them just say, like, actually, we're going to skip? Like, has this come up at all, or generally does that not happen for you guys in particular?
It happens, right? And so, it's the same way of, the projects that we say that's the hot deal, and perhaps we can't get allocation into that round. And so we have some founders say, hey, we're not going to go down the traditional VC path. We're going to do a fair launch with the community. And we say that's great as well. So let us know how we can best support you, right? And we'll explore if there's an open market investment opportunity that we can make down the line if we have that much conviction into the project. So again, it's up to the founder to make that decision. And the founder is always thinking about what is going to drive the most value. What are they optimizing for? Do I need to bring investors that can help me do X? Can I just rely on the community and kind of do more of this grassroots campaign to accomplish Y? And I think all models are acceptable, and it's really up to the founders to kind of choose what's fit for purpose for their unique needs.
Would you guys use platforms like the new ones that have emerged, or is that not a thing at all?
Yeah, so those platforms are mostly reserved for just retail participants, right? So it's like individual investors that curate,
You're not allowed in.
An angel syndicate, correct. Individual investors.
Okay, got it. And so, with everything that's changing, with the evolution of these models, besides, or including Coinbase Ventures, are VCs pivoting? Is there, a change in investment philosophies in general? An encouragement of doing a mixed model? How do you guys approach it?
I don't think that VCs are pivoting, right? For Coinbase Ventures, we've always been long-term aligned, right? So we're investing at the earliest stages into some of these founders, and we're investing into founders that are exceptional, that are more missionary, that support our mission of, okay, how do we increase economic freedom? How do we build the on-chain economy, right? Versus being short-term and mercenary. So I don't think the mission for us or that long-term thinking has changed. I do think what is changing is that I think we're going to see more hybrid investment models, right? Where you have a cap table that now consists of traditional venture investors. It'll still consist of angel investors. And then you might have some of these echo groups or legion groups participating as well. So I think the founders will have more diversified funding options and a more diversified cap table as well.
So we're kind of running low on time. So before we wrap up, we'd love to hear, do you have any predictions for what's going to happen with either, fundraising, what kind of projects are hot right now that, you're paying attention to, and any advice to projects that are fundraising?
Yeah, like I said, I think for the founders, maybe I'll start with the advice. I think for founders, thinking about what's valuable to you, right? And where are you in the founder journey, right? And there's multiple sources at this stage, multiple sources of capital that you can tap into. So I know a lot of the teams that are here that may have participated in, let's say, the ETH Global Hackathons, right? And you're kind of getting grant funding to determine, okay, we're going to build some type of MVP. The critical decision after you're kind of evolving from a hackathon project is do you actually want to build a business, right, out of this particular project? At that point, then you have multiple different models. You can go to venture investors. Coinbase, we're early stage. We invest as early as pre-seed, pre-product, all the way through Series A and beyond. Perhaps you're going to go through a platform like Echo and do just a community raise like that. There's also let's say we talked about the fair launches. So I think my prediction is that I think we're just going to see this convergence of traditional institutional capital along with retail, right? To really push this frontier of crypto forward. And like I mentioned, Coinbase, we're just excited. We are going to continue to invest across all market cycles. We're very long-term in our thinking. We're missionary aligned. And so if that's the type of future that you want to build as well as relates to on-chain economy, we would love to connect.
Okay. And just a quick one, what are the top 3 trends or top 3 areas of tech that you have your eyes on for this year?
Crypto AI. Check out we published our crypto AI thesis a few months ago, so that's the area we're spending a lot of time on. Stable coins and payments as well. And then I would say next gen DeFi that opens up the DeFi markets to retail participants as well.
Interesting. Thank you so much. Really enjoyed this conversation.
Thank you for having
me. Thank you so much for joining us. Thank you.